VICI Properties is a great dividend stock for long-term investors. It is actually a real estate fund, also known as a real estate investment trust with the ticker abbreviation REIT, and the ticker for the stock is VICI. VICI Properties specializes in real estate, particularly in the gaming sector and a few other sectors. Thoroughly research companies to understand what they do. This is purely quantitative to show that the stock is relatively well positioned with an attractive dividend of between 5 to 6%. The current price is $32. Fair value is $32 according to Morningstar, which still gives it 4 stars. Recently, the price has risen somewhat from VICI Properties, which means the better buying opportunity is behind us. But there may be a second chance in the short term. You never know what time will teach in the short term. In any case, analysts from Wall Street give a consensus price target of around 35 with a lowest price estimate of 31. This implies that the downside risk could be lower than the potential upside risk. All in all, based purely on data and figures, VICI Properties seems to be normally valued with a fair price that you can pay today for an interesting real estate fund. You also see the historical movement, the price. At this moment, it is below the norm's multiple line and slightly below the fair value line that you could assign to this real estate fund. The price to earnings ratio is natural, and it is currently slightly lower at 14, while the 5-year average is 16, and the 10-year or 9-year average is around 16. What could that mean? That could mean, at least in the medium term, over the next 2 years, that VICI Properties can achieve capital returns alongside a high dividend. And that would result in an average return of about 14%. That seems realistic to me, that at least VICI Properties can achieve an average return of above 10%. Also, because the valuation at this moment is relatively attractive, not only in relation to the company itself, in relation to the intrinsic value, but also in relation to the relative valuation. We see here a number of valuation metrics, and if we look at the price to AFFO, it is estimated at 14.2 next year, which is below the sector median, so that is 15% lower than the sector median. And other factors also seem favorable, with an acceptable total debt to capital. The growth of VICI Properties, on the other hand, is relatively strong. They not only have a lower valuation, but also a potentially higher growth. And that is why VICI Properties receives a strong buy rating or a higher score on data and quantitative factors. In other words, in the short term, this stock could rise interestingly high, and you can also see that the dividend growth over the past 5 years is interesting at 7%. We see a number of other figures regarding growth. Delve into that thoroughly. Also, look at the profitability, which is important, and worth mentioning about VICI Properties is that they have a relatively strong performance on return on equity of 11%, and this can of course be the result of a specialized strategy, as it is not just a random laundry fund, but they have a clear strategy, and it seems to be paying off well in terms of profitability. This also benefits the dividend. For next year, the dividend is estimated at around 5.4%, just under 6%. However, this could become 6% with a short-term price drop. Payout ratio is 65%, which is acceptable. We see that over 5 years, the dividend has been paid out and grown, so that is positive. It actually seems like a setup for a dividend aristocrat, a company that pays dividends for 25 consecutive years with also attractive dividend growth. But of course, anything can happen in the real estate market. In the short term, Zexrank gives a hold rating. And regarding the technical analysis, as I mentioned earlier at the beginning of the video, the best buying moment was actually a while ago, a few months back, around the price level of about 28. If you then establish the price at the uppermost of the prices, you can establish the price at the uppermost, and there could be a strong resistance level around the price of approximately 34 to 35, such as ideal scenario, the price rises to 35, but then in the short term it drops again by 15 to 17%. Then not only has the dividend increased to 6% per share, but you are also buying a share at a more attractive valuation. In my opinion, I think it's a good time to say that it is indeed a particularly favorable moment to express that the decision ultimately rests with you. This stock appears to be a very intriguing option for those interested in dividends, as it offers a reasonably acceptable balance between return and risk. And of course, interest rate developments have an impact on VICI Properties. Don't forget to compare it with other real estate funds. Check out our YouTube channel, subscribe to it, and also watch the analysis of the 5 to 6 best real estate funds for the upcoming period. And by the way, VICI Properties is just one of them. All in all, it seems interesting, and if we're lucky, the price might drop again to, for example, 27. You never know, short-term volatility can work in our favor as long as we are patient.